It's Friday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, we have a DHL Supply Chain Pricing Power Index by Andrew Cox. But first, Zach Strickland's back with us to give us a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday Carrier Update presented by PowerFleet. I'm Zach Strickland, and we continue to watch those volumes just drop in the United States in terms of truckload activity. We have obviously crested the peak, tender rejection rates as well, down to about 14.16% off that peak of 19.23% we saw just a week ago, or just over a week ago. Of course, volumes are accelerating a little bit as they come off this peak, so they're not quite as flat as they were just a little while ago. Tender rejections as well continuing to accelerate right now. So, this is not unexpected. This is what we sort of thought we would see at this point in time in terms of how fast they came up, and now they're starting to come down really quickly. So let's look and see what's going on in the rest of the country. How this equates to a spread of volumes dropping throughout the country. You can see these white areas here do not have significant statistical decreases or increases. This is the market volatility map that I have pulled up right here. So anything in those dark reds are going to be moderate. Anything in the bright reds are going to be a strong decrease. Anything in the bright green is going to be a strong increase in overall volume, and anything in in overall tender rejection rate. Anything in the dark green is going to be a moderate increase in tender rejection rate. So capacity, again, coming back online pretty fast right now. We're looking at outbound reject volatility here in this column right here. On all of our biggest markets, except for the Atlanta market, we are seeing strong decreases in all tender rejection rates. The volumes have leveled out a little bit in terms of statistical relevance. Ontario's still showing a moderate decrease. Dallas is coming off a pretty strong showing with a strong decrease in volumes overall. Atlanta actually has a slight increase in volumes day over day. So something to watch out for in Atlanta as they're holding on a little bit better in Harrisburg as well. It's still down, but it's not a statistically significant drop in Harrisburg up there, where we saw a majority of this activity as this, the outbreak was really getting going. We saw a lot of these ramped up volumes out here in California. It's been a little bit more stable, throughout this whole situation. Not necessarily the large rise or a large fall, but that is more of a signal area for us to watch moving forward. Looking at some of the bigger markets in terms of volumes, I've got Los Angeles, Elizabeth, New Jersey, Harrisburg, and Atlanta pulled up here. You can see there's a dramatic difference between these two markets, or these four markets. You have these two markets down here, Elizabeth, New Jersey, and Los Angeles. You can see that they really, these are kind of port cities. They never really got going, as this, as the volume started to increase throughout the country, and then all of a sudden they just plummet, down below where they were in February. So again, we consider this to be a kind of a product of the fact that we're seeing a lot less tender activity in those areas because of the port volumes. These two markets are in more densely populated areas, so there's going to have a lot more. There's going to be a lot less, activity in those areas in general, just because people are sheltering at home, densely populated, more businesses are shut down, manufacturing, etc. Out here in Harrisburg and Atlanta, however, volumes are holding on a little bit better up in these markets. You have a lot more expansive area. DC activity is a lot more prevalent out there, but these are also hub areas for the regions that they are positioned in. So you're going to see a little bit more, dispersion across a region out of these markets versus the Los Angeles and Elizabeth markets. So something to pay attention to in the bigger markets, especially where there's a lot more room for DCs. The real estate prices are a little bit cheaper out there. Looking at the customs data. Now, as I was mentioning with Elizabeth, New Jersey and Los Angeles, customs and import shipments are extremely important in seeing what we're going to look for in the future as those inventory levels are depleted rapidly in those DCs and warehouses. A lot of it originates over the ocean there in China. I've got the customs shipments from China to the United States. You can see that we have been kind of hovering a little bit here, and this is also paired with the outbound loaded rail volumes out of Los Angeles. Again, we're seeing this little undulation. We've kind of bottomed out, but we haven't recovered strongly. Again, signaling that we may not have the inventory if demand does kind of show up here in the next little bit. Well, that'll do it for this week's carrier update. Stay tuned for more.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to the DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, the freight frenzy that we've experienced for the last couple of weeks has left us as quickly as it came. So the carriers actually lost 5 points of the pricing power this week. It's not quite a balanced market. They still have a little bit of power, but with volumes and rejections plummeting quickly, we might see this thing snap back even further in the coming weeks. But let's look at volumes. So we've had 9 days. This is as of yesterday, as the time of writing. Since the 9 days since the peak of volumes, we've seen it drop 12%. And in the 9 days leading up to that peak, we saw it rise 11%. So this is what I'm talking about when I say volumes are falling as quickly as they rose. We expected this to come. Consumer spending is way down. Some people are saying it's down 30% or so. 95% of the country is on shelter-at-home lockdowns. Much of the economy is shut down. So these volumes are going to continue to plummet. Really, the only things that we've talked about that are insulated are consumer packaged goods, medical supplies, and food. And that's just not enough to keep the volumes that high for this long.
Right, and this is something that you spoke to earlier on a few weeks ago, is that even though we're seeing a surge, it's not sustainable and it's not going to last very long. And so we're really seeing this kind of happen real time here, especially with this near real time data. So it's interesting to see this, how that pull forward effect is going to really take this. How low is that going to take us all?
Yeah, that's right. I mean, I've heard some people around the office expecting, something around 9,000, the OTVI to be around 9,000 here at the end of at the end of April, excuse me. So I don't know if it'll go that low, but I do believe we'll see something in that normal range. If this trend continues, if we follow the trend downward as quickly as we rose, we could expect to see something in the 10.6, 10.7 range next week, which will be where I would normally expect volumes to be at this time, but we'll probably continue to fall after that. But on the capacity side, so the same idea. We're a little bit closer to the peak. We're only 4 days since the peak capacity tightness. We've fallen 16% in OTRI, and outbound in the 4 days prior to the peak, we rose 5%. So you can see that capacity is retreating and loosening as quickly as it tightened around the country.
Right, and so some of the other factors with the capacity, right, are drivers even taking themselves out because maybe they have fears of, contracting the coronavirus, right? So.
Yeah, and that's something we have seen. I don't have any data to tell you whether those drivers that had decided to stay off have gotten back on the road, but I can tell you that there's just much less freight than there was, last week or the week before. That's why we're starting to see these outbound tender rejection index fall significantly in the past couple days. Andrew,
I'm almost afraid to ask, but your outlook in the next few months here.
Yeah, so we can go back to our graph here. If we have a 3-month outlook, so what we're looking at sometime mid-summer, late summer in July, I'm hoping by then that we have most of the economy open back up, and at that point we'll have normally, something like a normal balanced market. I say somewhere between the 45 to 55 range, where we'll have strong volumes. We have retail activity starting to pick up. Hopefully most of the manufacturing and industrial economy will be open up and running. So I can hope for a balanced market here in about 3 months.
Right, and so we can, as you mentioned, more and more business kind of coming online around that time frame. It's going to be interesting to see what the rollout's going to be, what businesses kind of start to come back online first and foremost after we see all the essential businesses.
Yeah, because we've spoken that there's also different regions of the country that are much further along in their phases of the coronavirus battle. Something like New York is much further ahead than some places like Florida or even Louisiana, and some places haven't been hit that hard yet that may be hit later on. So the whole country will hit at different timings. I'm hoping that in 3 months, we'll have most of the economy open back up.
Awesome. Andrew, thank you so much. And where can people find more of your insights?
So you can go to freightwaves.com/passport to find all of the passport research items. We write three or four reports a week. This one is one of the free ones, but we have many incredible, really deep and insightful research from JP's team on freightwaves.com/passport.
Awesome. Andrew, thank you so much. Insightful as always. And that's going to do for this week's edition of the DHL Supply Chain Pricing Power Index update. Be sure to tune in next week to get all the latest from Andrew. That's going to do it for this Friday edition of FreightWaves Now, but the fun doesn't stop here. Our media team is always working hard behind the scenes around the clock to make sure that our streaming platform is always running with tons of content for you. So if you're looking for a little bit more insights, check out our FreightWaves TV app and all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.